Today's Friday, June the 26th, and McClellan's got his numbers out, so I wanted to put this video out really quickly because I noticed some things on the S&P chart, and there's some technical patterns setting up that are confirming some of the things that we thought about the pullback. But let's look at the volume in the Dow. Look at that, pretty darn impressive, and the NASDAQ equally impressive because that's been making highs all week pretty much, and the S&P 500 pretty decent volume. If we look at our McClellan oscillator now, we can see that we are below the negative 200 line on the oscillator. This is what it looks like if we expand a little bit. You can see we've just had this downward trend ever since June the 16th, down, down, down. And you know, this was the big coronavirus drop right here. And this is what the McClellan oscillator was doing, managing to stay below the oversold line for quite a while. We could be heading into that. Here's the volume stacked, huge volume. Biggest volume of the week, second only to last Friday. Fridays are big volume days. This is a Friday, this is a Friday, this is a Friday, this is a Friday. So Friday is when you expect your big volume, and we certainly got it, but it was all in favor of the sellers. Look at the sellers. As much selling going on as there was in this little drop here of the Dow Jones back on June the 11th. The summation index, you don't see it too well, but it just continues to drop. We're really looking to see, you know, when it gets down to the 2000 area, and that's when we'll pay more closely attention to it. But now let's take a look at the charts, because here's what we see in the S&P. Now, first of all, let's look at the weekly, and let's remind ourselves about this trend line that started back in 2002 and had several hits on the way up. That trend line, this is a weekly chart, that trend line was exceeded for 2 weeks. This is a dash trend line. It's not an established trend line yet because there's only 2 points. But look at the Fibonacci's on this pullback. If we take the Fibonacci from here down to here, and I'm using here the average of several days to pick the bottom of it. I'm not picking this bottom here. I'm picking the average of this cluster of lows, and I'm picking that as 0%. And we saw ourselves exceed 78.6%. But then we pulled back to the 61.8% and then saw rejection at the 78.6. So we have a technical pattern setting up here. This week, today, we saw support exactly on the 50-day moving average, more technical trading. When we do have a rebound up, we're going to see it choking at 31.21 and then choking at the top of the gap, and now it's going to form the third point on this trend line. I'm figuring, anywhere right in here in the first 10 days of July, we've got the ability to form this trend line or create this trend line and hit the top of the gap. So let's see if we can start the beginning of a Gartley pattern here with an auto harmonic. So let's go down to here. This is our bottom point right here that was picked automatically by motive wave, and you can see that here we had an ABCD, which would have had a top right in this area here, but it exceeded that. So if we move out a little bit more, this is a true Gartley with a 61.8% pullback, but it would have peaked out right here at 31.56, but instead it went a little bit higher, and now it's pulled back below. So you could say that's a completed Gartley pattern. I'm going to take it off now. We're going to not spend much more time on it. So, oops, what did I kill there? But we're going to now look for continued support on the 50. If we lose that, we have the 200 down below. Remember when we had the cross here, the golden cross of the 50 EMA and the 200 EMA, that portended some bullishness for the market, but the bullishness is being tested. Look for a test now down to 61.8%. This previous low, this Fibonacci number, and this coincidence of the 50 and the 200. 50, simple moving average, 200, EMA. Look for this as where we pull back to next week. Here's some other interesting points. All this noise in here was right around the 50% retrace of this high and low. So we really have some technical things looking, staring us straight in the face now in the S&P 500, and they tell us that we're going lower. We're going down to the 61.8% next week, and it may happen Monday, may happen Tuesday. The VIX went up a little bit, not terribly. Apple had a bruising day. Don't know why. I would suspect that it's profit taking from all of the people who got in at this point. If we were to put a volume profile on here, let's do that. Let's put in a study, and let's see the daily volume profile. And let's create it. Where is it? No. Let's look at the different study. Let's look at all studies, and let's look at volume study. Bear with me, because I think this will be worthwhile. Volume. There's a lot of volumes. Volume profile, that's the one we want, the volume profile. And here is our volume profile. Why are we not seeing volume down here? Let's give it a 300 tick range. Regular trading hours, historical bars, apply. It's not helping us much. I'm going to work on this a little bit, but I suspect that there, when we get this working properly, there's a lot of volume down here. But let's move on. Home Depot down 438. Love these kind of pullbacks in these stocks where I've got short calls. I mean, I'd love to see Apple come down an awful lot more between now and September the 18th. Caterpillar, remember my short calls are at the 130 and they're November's, so I'm really quite happy with this hesitation. NVIDIA, I believe it was Andy who said he had gone short on NVIDIA. Might have gotten out of it yesterday, but if he stayed in, he was rewarded with a nice little pullback today. Whirlpool, gold, are we seeing any good stuff coming out of gold? We've lost our trend line that was drawn in here. It's gone. Let's go to the primary analysis. There's our trend line. And let's take a look. Let's get the Ichimoku out of there, but let's not. Look at how the GDX came down and tested the cloud. This is really interesting, and this is a potential support area. And if we try to draw a trend line, we do have one here. Not really, not clean enough. But we do see gold miner support on the cloud. You want to buy gold miners if you want to use that as a hedge against the market going down. Let's put an alert in here. Let's create an alert. I think I might just buy some gold miners next week if this cloud support turns out to be real. Netflix down $22, down 4.5%. This is clearly end of quarter selling. There's still a few more days left in the quarter, but this C point that we didn't have much confidence in this shark pattern, is sure having an effect, a chilling effect, and it's just hanging in there at that C and refusing to go any higher. It would indicate that we're going down to 146 on Netflix. I don't know what would cause that, but we're going to continue to keep an eye on it. The banks didn't have a good time today because of the Fed announcement limiting their ability to buy shares and limiting their dividends. It wasn't as bad as I thought yesterday. They can't pay a higher dividend in the third quarter than they did in the second quarter. I think that that's still pretty generous. But the banks, Bank of America down 6%, Goldman down 9%, JP Morgan, the biggest bank in the country, 5.5%, Wells Fargo, the fourth largest, 5% for the fifth largest, and Citigroup, the third largest, down 6%. So the banks got hammered, and you can't say that it was because of the fear in the economy or the Fed rates. It was strictly the Fed's decision, to look and retest the capital strength of the banks. So that's all for today. Have a good weekend. Thank you very much. By the way, I apologize on Thursday. I didn't hit the publish button, only to come back and find out Friday morning that I hadn't hit it. So for those that were looking for it, I'm really sorry. Hope that won't happen again. Have a good weekend. We're looking for more downside next week in the S&P. The McClellan oscillator tells us that, and the S&P support at the 50, but the looming 200 down below and the cloud further down tells us that we're going further into the negative.